So would you agree, though, in the long term, Tesla is valued by some metric that
ways or have a high chance of underestimating is the network value or the stickiness of a product, okay? So in other words, like all of the market cap. Tesla, the attachment rate to their product and loyalty is insane. And then look at the loyalty of his employee base. He just pulls a couple of guys and throws it into government, and like they're doing the work of like 100,000 people. So the reason Tesla, I think, is getting hammered is that it's got the My Pillow problem right now. Like, I don't know if you guys remember, like, suddenly he's like, I'm not going to buy this pillow because the guy's like saying their election's rigged. And I think people are trying to cancel Tesla. And it could happen, okay, but I'm going to just say that is the single thing you have to bet. If you think Tesla, the attachment rate's going to change, then Tesla's a sell. But if you think there's no change in the pace that they innovate and lead, then stock's going to recover easily.
Than 20%, maybe. These are the things that people are going to worry about. But we also think stocks got really washed out. And as you know, I've been talking about this with Tesla, that Tesla, we think, got so washed out that they reported terrible earnings on Tuesday after the close this week, and the stock.
In 2007, when the iPhone came out, okay, my first, because I was a wireless analyst, I actually was like, oh, I mean, everyone uses Nokia and BlackBerry, like who cares about Apple? But within the first 12 months, Apple completely disrupted the industry. I mean, it's not even close. Like since 2007, Apple has taken 99% of all the profits of the wireless industry. And like
rose, and it's actually had 2 consecutive gains now, and now solidly trading above its 20-day moving average. That's constructive in my view. And it's a positive surprise. Similarly, Bitcoin's finally catching a bit. Pressure valve of investors panicking on earnings. I also think it's been really good news to see Tesla rally because, you know, it's been our view that Tesla's more or less the exhibit A for what kind of bounce can ensue, because remember, Tesla got hit the hardest first, and actually it's been holding some important levels. And then I think there are things really, as we look towards the next few quarters or a few months, to be positive about, because there is the tax deal. And, you know, at the end of the day, there was a lot of technical damage, but a lot got repaired. So, you know, I do think this was an important day.
Sales.
And there's also media, perhaps misinformation, but adding to this concern. There's a survey that a German newspaper put out pointing out that 94% said they wouldn't buy a Tesla car. It was an online survey. However, by the end of the day, those numbers had flipped, actually, and it turns out 70% of Germans would buy a Tesla. To me, this is reminiscent of what happened with My Pillow. If you're not familiar, My Pillow was a very popular pillow, but it turns out the CEO became embroiled in controversy when he claimed the 2020 election was fraudulent. And as a result, he lost many business partnerships. Well, I think that that's the same moment. This is the My Pillow moment happening to Tesla. So the question is, can Tesla get canceled? Here are the 5 things that I believe represent the competitive strength of Tesla. And I'm going to walk you through it. The first is the strong brand and customer loyalty. I mean, it is synonymous with innovation. But this is exactly what is being questioned today.
Ed, I think we should just watch Tesla. If Tesla has an L-shaped bounce, then the market's bounce will be L-shaped. But if Tesla bounces from 220 back to some major retracement, then it's a V-shaped bounce.
All right, we'll leave it there. Cameron and Tom, thank you.
I think exhibit A for a V-shaped recovery is going to be Tesla, because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this bounce, that's a bull case for Mag 7 to be the group to own. The Mag 7 are not only the best companies, but they're the most liquid, and they've really derated. On top of that, I think financials and industrials look attractive as well.
What do you think it takes to see that reversal in sentiment?
Historically, roughly 38% of Tesla buyers were Democratic. By 2024, though, that had really changed quite a lot because Democrats were fleeing the brand. So I think Tesla was already suffering from a shift away from buyers based on political affiliation. And President Trump, in just last week, actually talked about buying a Tesla and supported the brand. I'm not sure that Tesla is going to be able to necessarily recover those Democratic leaning buyers, but I think it is strange that somehow Tesla has become a political brand. But there's other reasons to consider. Tesla has an enormous lead in full self-driving, robotics, and AI. That is not changing just because some folks are trying to cancel Tesla. They have a high quality employee base and an innovative culture. Tesla attracts the smartest employees, the smartest candidates, because they are not only drawn to Elon Musk, but also to the success of the company. They have superior battery technology and a supply chain that is unmatched. And finally, they are, well, I think the focus right now is on April 2. So I think the market has a lot of myopia around getting tariffs and tariff clarity. But we know that tariffs are just one part of the administration's goal. There is reducing regulatory cost. And well, Apple is one of our granny shots. It's a stock that we think investors need to really hold for the long term. The company has always been at the center of everything that's happening around a consumer and new technologies. So to me, there might have been some head scratching because these features may not be part of someone's life just yet. But as you know, Apple gets a lot of these things right.
All right. So by the way, for the audience, your granny shot, it's
companies that are really leading, right? Waymo, Uber, really enormous lead in scale manufacturing. They're one of the few companies that makes money selling electric vehicles, and they have an extensive supercharging network. So if you ask me, is Tesla threatened by the PR nightmare that's happening currently? I don't think so. I think it is ultimately going to be short-term noise. And if you look at the stock price, Tesla has seen this before. The stock has gone through periods of consolidation and then made explosive moves. So it's possible Tesla right now is consolidating, but does that mean it's not going to do what it's done in the past, which is make an explosive move? I don't think so. So to us, we still view Tesla as a granny shot. Now let's review some performance for Granny over the past week. The Granny Shots ETF fell 1.29% over the past week. That's compared to a 2.23% decline for the S&P. So it outperformed by roughly 94 basis points. And if we look at 1 week performance, okay, the top 5 Tesla. Of those, which one is maybe seeing the least amount priced in for this opportunity for AI and robotaxi and robots? I think it's Tesla. And part of that is just the enterprise value of Tesla is still lower than NVIDIA, but the practical applications and their connectivity to customers is a big opportunity. So that could be a really big opportunity. It's just been a bubble. And we had talked about how AI is a multi-decade story because there is a global labor shortage coming. The world is actually running short of workers. So by the end of 2030, the world is going to be short 80 million prime age workers. That's why the U.S. demographically is benefiting, because we still have positive worker growth. Performers over the past week were GE Vernova, NVIDIA, CrowdStrike, Quanta, and Axon Enterprises. And the bottom 5 performers are the ones that were contributing most to the decline are Costco, Intuitive Surgical, Accenture, Abbott Labs, and Apple. From a style perspective, cybersecurity was the leading component of the granny shot performance, and that is these 5 stocks. The second largest contributor is the style tilt, which has these 19th. Another reason to not throw in the towel completely is the Fed is dovish, and we got a reminder of that with the March FOMC rate decision, which came at 2 o'clock on Wednesday. Markets actually immediately rallied, and it's a reminder the Fed was dovish. A couple of highlights I'd point out. First, Fed Chair Powell spoke about how the tariffs could create some inflation, but he'd view them largely as transitory. That's a good view. That's a good word, because that means the Fed won't necessarily take action to try to slow those inflation effects. And second, there was a question about stock markets and declines and whether that would catch the Fed's attention. And the Fed Chair Powell reiterated the financial conditions are the main channel to the real economy, so they are paying attention. And if the soft data, which is both surveys and I would say by implication the stock market, are weak, they don't want to dismiss it, so they'll watch it carefully. That's just AI has improved so much, and we're hearing these anecdotally now, that it is now capable of replacing a lot more jobs, maybe even exceeding the shortfall of workers. So let's say that the real need for global AI was 80 million worker shortage. So in simple math, it's a $8 trillion opportunity or something, or 800 billion. I'm getting the log. But now they can replace more workers. In the U.S., what if AI could replace 20% of the workforce in the U.S.? Well, in the U.S., roughly 20 trillion is wage income, in consumption. So 20% is 14 trillion. 20% is 4 trillion just in the U.S. alone. Just a reminder, the Fed put is alive and well. And also a reminder, maybe more broadly, to not time the market. And if you're thinking of throwing in the towel, one last thing I just want to highlight for you is that the Cuban Missile Crisis of 1962 might be a good template for how markets could react to the tariff wars. The crisis lasted 12 days, from October 16th to October 28th in 1962. And initially, the market fell 5% over 7 trading days. But notice it bottomed on October 23rd, and it actually rose in the 5 days before the Cuban Missile Crisis was resolved. Think about that for a moment. The market was facing global nuclear annihilation, and the market bottomed 7 days into the crisis. And in fact, by the time the crisis was resolved on October 28th, 2/3 of the losses were recovered. So if that happened in 1962, I think the 2025 tariff crisis is going to play out similarly. Now let's turn our attention back to the ETF. And since the market highs, the stock that has fallen the most in our Granny Shots portfolio is Tesla. It's down 31% in just 1 month. Now, there's many reasons people are going to speculate why Tesla's falling. Stocks plummeted, but we think it's mainly because Elon Musk has become a lightning rod for those who don't like what the White House is doing. And by implication, they're blaming it on Tesla. For instance, this is from former Vice President candidate Tim Walz saying if he needs a little boost during the day, he just looks at Tesla stock. And even a late night talk show host is encouraging its audience to vandalize Tesla vehicles.
The 2% tariffs discussed don't include factors like child labor or currency manipulation, just pure tariffs. Brazil has relatively high tariffs compared to other nations, impacting trade dynamics with the US. The US faces trade deficits as imports exceed exports, despite efforts to balance trade relations. Tesla's FSD supervised early access program allows more users to participate and improve self-driving tech. Data collected from FSD participants helps Tesla refine software, though early versions may have bugs. Only Tesla vehicles with hardware 4 are eligible for the program, hardware 3 models aren't included. Elon Musk will continue advising President Trump after leaving Doge, maintaining political influence. Analysts view current market volatility as a buying opportunity, with Tesla seen as a strong investment. Brand-related issues reportedly cost Tesla around 80,000 deliveries, impacting growth projections. A Cybertruck with FSD crashed, raising safety concerns and highlighting challenges in autonomous driving. Tariffs and trade deficits. The 2% tariffs mentioned do not account for factors like currency manipulation or child labor, These are purely tariffs. Interestingly, Brazil has relatively high tariffs compared to other countries. Before assuming the current administration is making erratic decisions, it's worth noting the trade deficits. While many countries have the US as a major trading partner, the idea is that if they sell us a lot of goods, we should be able to sell the same value of goods back. However, this balance isn't happening with many nations. Tesla's FSD Supervised Early Access Program. Tesla has launched its full self-driving, FSD, Supervised Early Access Program in the US. This is similar to the FSD Beta program, but now open to a much larger pool of participants. While not everyone will have access immediately, enrolling allows you to help Tesla improve FSD by providing data. Participants will receive the latest FSD software updates, though it may still contain bugs. Currently, only hardware for vehicles are eligible, Hardware 3 models are excluded. Interestingly, Canadian users might also get access. Once enrolled, a new Early Access button appears in the Tesla app, showing your status and giving you the option to opt out. While some, like Sawyer, have already received updates, others may have to wait for the latest software version. Tesla doesn't officially call them beta testers, but that's essentially what they are. Elon Musk's political involvement. In political news, J.D. Vance, the current U.S. Vice President, confirmed that Elon Musk will continue as an advisor to President Trump after stepping down from Doge. This arrangement will last around 6 months, but Musk's influence in politics is expected to continue beyond that. Vance emphasized that Musk's work isn't done, both in business and political advising. This aligns with my earlier warning to Tesla investors. Elon's political involvement will likely persist for years, not just a few months. The backlash we've seen might be at its peak, but it's unlikely to get significantly worse. Market reactions and analyst insights. Brad Gerstner, who manages a multi-billion-dollar portfolio, recently sold all his Uber stock to buy Tesla, citing autonomy as a key growth factor. Tom Lee, a well-known market analyst, views the current panic as a prime buying opportunity. Historically, market drops during recessions can continue for a while before rebounding sharply. After Tesla's recent delivery numbers, price cuts seem probable. Some analysts, like Cantor Fitzgerald, maintain an overweight rating on Tesla with a $425 price target for the next 12 months. Others, like Truist, have lowered their targets to $280 but maintain a hold rating. Barclays and Canaccord Genuity have reaffirmed their ratings without major changes. Gene Munster estimates that brand damage cost Tesla around 80,000 deliveries in a quarter, attributing most of the shortfall to brand-related issues, with the rest due to the Model Y refresh. This view isn't universally accepted, as widespread stock price cuts haven't materialized. Elon Musk on fraud and legal concerns. Elon Musk recently addressed the lack of arrests despite widespread allegations of fraud and corruption. He suggested that fraud cases are so numerous that authorities are prioritizing which to prosecute first, implying that arrests are imminent. He also claimed that the U.S. Institute of Peace deleted a terabyte of financial data to cover up crimes, though Tesla recovered it. Tesla's global expansion and battery tariffs. Tesla is not abandoning India. In fact, they're expanding operations and hiring there. Regarding battery tariffs, if nothing changes, China's battery duties could rise to 82% by year's end. While Tesla is producing some batteries in-house, they still rely on Chinese suppliers, especially for megapacks. This could have long-term implications, as the US-China tariff situation is unlikely to improve soon. Cybertruck FSD incident. A warning for Cybertruck owners using FSD. A recent crash involving a Cybertruck with FSD engaged has raised concerns. The incident occurred while demonstrating FSD's capabilities, highlighting potential risks as Tesla continues to refine the technology. Here it is. There was definitely plenty of time to take over, but this guy says, I've logged thousands upon thousands of miles on FSD, and this never happened. This is one reason I personally tend to take over, even if the situation seems fine. It's just a precaution in case it's not. But for anyone who says you shouldn't use FSD, watch this. If the person wasn't using FSD, I'm not sure the vehicle would have stopped this quickly. FSD actually does a pretty good job of stopping exactly when it should. Good news for Tesla's demand. Thanks to strong interest in the new Model Y in South Korea, it's basically sold out. Previously, you'd have to wait 5 to 6 weeks, but now it's marked for Q3 deliveries. Also, Tesla has released the deep blue metallic paint color for the new Model Y in Europe. I think it looks great. On top of that, Tesla announced they opened 2,200 new supercharger stalls in Q1 and delivered 1.4 terawatt-hours of energy across 42 million supercharger network sessions. I've done a few road trips in a Tesla, and it's been a great experience. More superchargers in more locations is definitely a plus. I did have to take a few small day tours, but nothing major, just a few miles here and there. Elon's so toxic that people won't buy any cars, not just Teslas, but any cars. That's what some are saying because Rivian's deliveries dropped 36% year-over-year. Meanwhile, Tesla, with the Model Y being produced in 4 factories worldwide, only saw a 12.9% drop. The BBC is showing clear bias with the headline, Tesla sales unexpectedly plunge. When you're refreshing your best-selling product and stop selling it temporarily, a decline is expected. I'd have no issue with the headline if it didn't say, unexpectedly. Tesla investors largely anticipated this. I really like this, someone from Tesla said, we want to build a few superchargers cool enough to be worthy of the trip itself. Wish we could have kept it under wraps longer, but some were needed for planning approval. We can't hide anything anymore. I love that about road trips with my Tesla, some superchargers are in great spots. Not all, but many are in locations where there's something to do. When I had a gas vehicle, I'd rush to get out of gas stations as quickly as possible. But with Tesla, there's this one supercharger in California right by a beautiful lake. I ended up staying longer than needed just because it was so nice. When this location is finished, it's supposed to look like this, which is pretty cool. In Roswell, New Mexico, a new Tesla supercharger location is on the way. Good news from Australia, a new $175 million Tesla Megapack battery is about to go online and join the grid in Queensland. Hyundai officially unveiled the refreshed Ioniq 6 EV. I think it looks a bit better, but there's something about the shape, it reminds me of people with curved spines, like they need a chiropractor. The curve just doesn't sit right with me, and I wouldn't want to get this vehicle. Elon responded to a question about genetically engineered cat girls, saying, of course it's still coming.